Anglo American's chair will meet its top 30 shareholders to hear their views on BHP's bid for the miner. Stuart Chambers made the comment at today's AGM, saying he was restricted from discussing the spurned bid due to takeover regulations. Anglo rejected the $39 billion offer on Friday, saying it was opportunistic, significantly undervaluing the company and its future prospects. Capital & Regional has posted a near 13% rise in its full-year net asset value. The UK-focused REIT has also delivered a 5% increase in like-for-like net rental income and has proposed a final dividend of 2.95 pence per share, which reflects a growth of 7.3%. This comes amid what the board describes as uncertain times. And so given this, the firm says it will adopt a cautious approach to capital deployment. It believes this will give it time or some balance sheet flexibility until the inflation, interest rate and capital markets trajectories become more visible. Glencore expects profit at its trading division to be at the top end of its long-term annual guidance this year. The miner and trader expects full-year marketing earnings before interest and tax to be in the $3 to $3.5 billion range. But the company has left its full-year production forecast unchanged. That's after output in the first quarter was largely in line with the comparable period last year. Impala Platinum says it's on track to deliver on its full-year guidance. That's after the miner reported a 16% increase in total production in the 9 months to end March. The company's trading update did, however, highlight one dark cloud. CEO Nico Muller stated that PGM prices remain lackluster, with notable volatility in both platinum and palladium, which reflects the continued influence of investor activity. WeBuyCars expects core headline earnings for the half year to increase by as much as 29%. The company uses core headline earnings to measure and benchmark the underlying performance of the business. Core headline earnings represents headline earnings adjusted for certain non-recurring or non-cash items that the board believes may distort the financial results from period to period. But when using the headline earnings per share measure, the firm expects to report a headline loss per share of as much as 21.7 cents. This reflects the one-off professional, legal and listing fees the group had to incur as it made its debut on the JSE. WeBuyCars will open its books on the 13th of May. Goldfields has appointed Alex Dull as interim CFO. He is currently the VP of Corporate Finance at the miner and will take up the new position from tomorrow. Dull's appointment follows the early retirement of current CFO and Executive Director Paul Andy Schmidt. Goldfields says the process to appoint a new CFO is progressing well and an announcement will be made soon. MTN Nigeria has reported a loss for the first quarter. That's as the mobile services operator had to contend with what it calls a very challenging operating environment. Headwinds include rising inflation and continued naira depreciation. Looking ahead, CEO Carlo Torriola says the firm will remain focused on sustaining its commercial momentum, accelerating service revenue growth and strengthening its balance sheet. But he also notes that regulated tariff increases are needed to restore the profitability of the company. MTN Nigeria is MTN's largest business unit. Shifting focus to the energy space, South Africa's generation capacity is set to grow. 2 projects under the REIPPPP bid, Window 6, have signed agreements and reached commercial close. The Virginia Solar Park and Doornhoek projects are expected to contribute 360 megawatts to the grid, and the new generation capacity is expected to come online around May 2026. The Department of Mineral Resources and Energy says these projects will attract a total investment of 4.9 billion rand. Further afield, Volkswagen, Mercedes-Benz and Stellantis all posted lower sales and first quarter revenue as they geared up to launch new models and faced weaker consumer demand for new cars as interest rates remain high. Here's more detail on those numbers in this report.
3 of Europe's biggest automakers endured a tough start to the year. Volkswagen posted a 20% drop in first quarter operating profit as it was hit by lower sales and higher costs. German rival Mercedes-Benz and Stellantis also posted lower sales and first quarter revenue on Tuesday. Weakness in car sales affected mass market and top-end models alike. But the automakers promised improvements as the year goes on and new models hit the market. Luxury car maker Mercedes-Benz was worst hit in Q1 and reported a 30% drop in earnings. Stellantis said its revenue fell 12% in the quarter. Despite that, all three stuck to profit or sales targets for 2024 as their new models debut. VW believes rising orders in March will have a positive impact on second quarter results. Europe's legacy automakers face a number of challenges at home and abroad. The German firms, in particular Volkswagen, face rising competition in China from local brands. They are also spending vast sums on new, less profitable EVs to compete with Tesla. Meanwhile, Chinese automakers have introduced lower-cost electric models in Europe. Volkswagen says it still expects 2024 sales revenue to rise up to 5%. It also plans 30 new models by the end of the year, which should boost sales.
The European Union is cracking down on tech companies, slapping the industry with even more regulations. Let's cross over to Ndawling Lachela, who's standing by with more of the detail.
That's right, Zinati. Global tech giants have been on the EU's radar for a while. There's rarely a month without Brussels offering more regulation for those companies. And a new round is being discussed as we speak. Joining me with on-the-ground insight is Lars Halter from Deutsche Welle. Thanks so much for your time today. Now, Lars, let's get straight into it. Who's being targeted by Brussels this time?
Thanks for having me. Well, this time it's Meta they're going after. That, of course, is the company behind Facebook and Instagram. As it seems, European Union regulators are opening a probe into those Meta platforms over concerns that the company is not doing enough to counter disinformation from Russia. Regulators suspect that Meta's content moderation is not going far enough to stop the dissemination of political advertising that risks undermining the electoral process. Now, propaganda out of the Kremlin has long been known to be a dangerous tool to meddle with international politics, and this year it could be more dangerous than in previous years. First of all, fast evolving tech allows for ever more manipulation, and we're in an election year, of course, with elections coming up in Britain, Austria, Georgia, and, of course, the United States. Also, elections to the European Parliament are due in June.
So this is unrelated to previous action the EU took with regards to its often discussed data acts.
It is indeed, but that doesn't mean that those issues have been resolved. As a matter of fact, the EU has also just said that Apple's operating system for iPads must comply with tougher new rules that Brussels is imposing to rein in the world's biggest digital companies. So now we're back talking about the Digital Markets Act, and the European Commission designates the iPad OS system as a gatekeeper, meaning that it too has to take further steps to allow competition between online platforms. Other Apple products have previously been designated as such gatekeepers, including iOS for iPhones, the App Store, and the Safari browser. Add to that Google parent Alphabet, Amazon, and Microsoft, and we see that the EU is really being careful to rein in big tech in general.
Lastly, will these kinds of new rules go on forever, or is Brussels coming to an end at some point?
That's not likely, because as tech evolves, the EU's rulebook and enforcement will too. Just think about the fact that most of these recent rules and regulations out of Brussels were targeting operating systems and social media. They have barely touched AI as of yet, and it seems clear that AI is the biggest game changer ever in the tech world. It comes with enormous opportunities, but also with incredible risks for consumers, for the industry, for governments, likely for democracy itself. So for the foreseeable future, I'm sure Brussels will be keeping a very close eye on tech, and the EU has shown that they can be tough regulating firms and threatening hefty fines that have actually had an effect too. Just look at these gatekeepers I've just mentioned. Most of these products have already undergone changes. They do offer consumers a way to connect to products from rivaling companies, so we are actually seeing results.
Lars, let's leave it there. Always appreciate your insights. That was DW correspondent Lars Halter.